This time around, engine malfunctions and higher fuel costs hit IndiGo's profits. They were down 73% on year, with margins also being hit and coming in lower than street expectations. Let's bring on board Pranay, who joins in with the latest. And Pranay, apart from the numbers, lots of questions and commentary awaited with respect to the strategy and the appointment of the MD and CEO.
Well, IndiGo's numbers have missed expectations, mostly on the operating performance as well as on the bottom line. So even though they had passenger traffic increase of nearly 21% and the revenue per kilometer increased even better at about 25%, the reflection of that in total income was lesser at about 18%. Since the aircraft were grounded and the airline was impacted majorly as a result of this, it has dented the operational performance significantly, which is why the EBITDA is down by about 22%. So fuel costs have actually increased by about 33%. There are other costs which are up more than 25%. Also, there is the hit from Forex, all of which led to EBITDA margin, falling nearly 10 percentage points to 18.7% this time on a year-on-year basis. And as a result, even though the street was expecting a fall of profit on a year-on-year to about 150 crore, it's coming at 118 crore rupees, much more like I said. So there are some one-off items where we will have more clarity on this in the con call with regards to what were the excess costs that the company had to take with regard to grounding of aircraft, because there are these parking charges for the slots, but yet the aircraft can't take to the skies, and there are some fixed costs that the airline has to bear as a result of that. Also, what is the compensation that they are going to get from Pratt & Whitney for issues with these engines? Going forward, they've said that capacity is going to increase by 19% in Q1 and 25% overall in FY19. So clearly it's going to be back-ended. We are yet to await more details on the appointment of the CEO, which will come after the con call.
Well, speaking of more details, let's cut across to the IndiGo conference call that is currently underway.
2% compared to a profit after tax of 4.4 billion rupees with an after-tax profit margin of 9.1% during the same period last year. We reported an EBITDA of 11.3 billion rupees with an EBITDA margin of 19.5% compared to an EBITDA of 14.5 billion rupees with an EBITDA margin of 29.9% during the same period last year. As we had said in the last few quarters, we also received credits from our manufacturers this quarter to offset some of the adverse impact from aircraft groundings and delivery delays. Our profits for the quarter were lower compared to the same period last year, primarily because of three reasons. One, the fuel price increased by 11.6%. Two, our yields declined by 5.6%. And three, we were adversely impacted by foreign exchange. We booked a loss of 925 million rupees this quarter compared to a gain of 1.6 billion rupees in the same period last year. Just the foreign exchange impact resulted in a year-over-year swing of 2.5 billion rupees for the quarter. Our earnings per share were 3.06 rupees for the quarter and 60.03 rupees for the full year. Our total capacity for the year was 63.5 billion ASKs, an increase of 16.4% compared to the same period last year. Our total capacity for the fourth quarter was 17.1 billion ASKs, an increase of 20.9% compared to the same period last year. This is lower than the capacity we had previously guided due to the grounding of some of our NEOs during the quarter. Our revenue from operations in the March quarter was 58 billion rupees, an increase of 19.6% over the same period last year. Our other income was 2.6 billion rupees for the quarter. Our RASK for the quarter was 3.40 rupees compared to 3.52 rupees during the same quarter last year, a decline of 3.2%. This decline in RASK was primarily driven by lower yields, partially offset by higher load factors. While our yields were down 5.6% to 3.31 rupees, our load factors were up by 2.8 points to 88.9%. We normally do not give guidance on how the revenue environment in the current quarter is shaping up. However, last year, we did share certain short-term yield trends post the demonetization event, since it had resulted in a sharp decline in yields during that quarter. Having said that, let me provide some color on near-term yield trends. Currently, we're seeing yield pressures in the industry. We saw that in the 0 to 15-day booking window, the fares are materially lower compared to a year ago. This is typically high-yielding traffic, and consequently, our yields have been impacted more than expected, and that is in spite of increasing fuel prices. In April, the revenue environment was weak, and year-over-year yields were down more than we were expecting, primarily driven, again, by the weak pricing in the 0 to 15-day booking window. That said, there have been some recent signs of yield improvements in this window, but it's too early for us to comment whether this will sustain over the quarter. Fuel prices increased by 11.6%, which led to an overall increase in CASK by 7.4%. Our CASK for the quarter was 3.30 rupees compared to 3.08 rupees during the same period last year. CASK excluding fuel was 1.94 rupees in the current quarter, an increase of 5.3% from the same period last year, primarily on account of the depreciation of the Indian rupee this quarter compared to an appreciation in the Indian rupee in the same period last year. Similar to previous quarters, we also paid a GST of 356 million rupees under protest in the March quarter. Now moving to the balance sheet, we had total debt of 24.5 billion rupees at the end of March 2018. As we have discussed previously, we have started purchasing some of our aircraft with our free cash. We purchased 3 more ATRs during the quarter with our free cash, in addition to the 3 ATRs we had purchased in the previous quarter. We will continue to purchase more aircraft with our free cash going forward. Our cash balance at the end of the period was 137.1 billion rupees, comprising of 70.6 billion rupees of free cash and 66.5 billion rupees of restricted cash. Based on our cash position, the cash required to purchase aircraft, and the overall profitability for the year, the Board of Directors has recommended a dividend of 6 rupees per share for fiscal 2018. This is subject to approval by our shareholders in the upcoming annual general meeting. Now let me give you guidance for the coming quarter and for fiscal 2019. We expect a year-over-year capacity increase in terms of ASKs of 18% for the first quarter of 2019 and 25% for the full year of fiscal 2019. So, to recap the year, we've generated record profits, we continue to focus on our costs, and have delivered consistent and profitable growth. With this, let me hand it back to Ankur.
Thank you, Rahul and Rohit. To answer as many questions as possible, I would like to request that each participant limit themselves to one question and one brief follow-up if needed. And with that, we are ready for the Q&A.
Thank you, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Binay from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity. My question is on the load factors. The load factors currently are close to all-time high. So when we look at next year, should we look at the March quarter load factor and look at that as a doable, or should we adjust for seasonality and benchmark it to the financial year 18 load factor? So could you sort of guide a little bit about how do you see load factors moving in a year where capacity will grow by 25%?
Hi, Binay, it's Rohit. So I think as we've historically talked about, we don't try to look at load factor or yield in isolation. We try to maximize RASK. And there are various periods in time where sometimes the optimal RASK includes higher load factors and slightly lower yields and vice versa. So we've always looked, and our revenue management systems are all trained to optimize RASK. So having said that, yields have been low this quarter, and that was offset a little bit with higher load factors. That'll not necessarily be indicative of what to expect going forward, and we don't normally give forward-looking guidance on that in any case.
Right. Because, one of the questions we get on load factor is that, some of the peers are running at much higher load factors. Would you normally attribute it to them having a larger fleet of smaller planes, or like for an A320neo or an A320, what would be the ideal load factor? I know it's tricky to answer that, but any points on that?
So Binay, as you probably have noticed over the last year, our load factors have increased on a year-over-year basis, primarily on account of us being much more aggressive, as we've signaled, in terms of matching competitive fares. So that's what you would see with load factors. Now there's no ideal load factor, as I said, because it's always a combination of optimizing yield and load factor.
Great. Thanks a lot. I'll come back in the queue for my second question.
Thanks, Vinay.
Thank you. The next question is from the line of Sonal Gupta from UBS Securities. Please go ahead.
Hi, good evening. Thanks for taking my question. Rohit, just want to understand, again, speaking, load factors are on all-time high. Your load factors are running close to 88%. And still we're seeing the yields drop. So I just want to understand, in terms of how, even for the industry as a whole, it's not just you, the whole industry is running at all-time high load factors. And still we're facing this yield pressure. So could you just explain why this should, ideally you would think that at such high capacity utilization levels, you could actually start seeing it moving the other way, over and above the fuel price increase. But it's going the other way. So can you just explain the phenomena and just what you think?
Sure. So clearly we're not happy with what's going on in the industry with respect to yields, especially with respect to close-in bookings. However, in the past, we'd made this mistake where we didn't match the fares that the competition was offering. We've clearly indicated we will not make that mistake again. It's fundamental to our business that we should always remain competitive. Our competitors have been offering discounts to passengers through coupons, special email promotions, and we continue to match these offers. At the end of the day, our perspective is the revenue environment can always remain volatile, but we remain focused on our cost. And our cost structure is the lowest in the industry, and that provides us the cushion to withstand these short-term pressures. Now, we feel these fare levels, especially with today's fuel price levels, or in the light of the fuel price levels, these fare levels are just not sustainable. And that's why, again, our lowest cost structure gives us that cushion to withstand the short-term volatility. Rahul, anything you want to add?
Well, I agree with you entirely.
Sorry, if I could just clarify on the 0 to 15 booking window
Sorry
thing.
to interrupt, Mr. Sonal Gupta, but your voice is breaking, so if you could just...
Can you hear me? I'm sorry, I'm in a slightly bad coverage area, so...
Yeah, please go ahead, sir.
Thank you. So just on the 0 to 15 booking thing, window thing, so we typically...
Sonal, I think maybe you can go back into the queue and join when you're, and we'll take your question.
Sure. Thanks. No problem. Thank you.
Thank you. The next question is from the line of Kunal Lakhan from Axis Capital. Please go ahead.
Yeah, hi. Good evening. In your opening comments, you mentioned about the company being compensated in some way for the revenue loss due to the grounding of planes. Have we been fully compensated or partially compensated? And can we look at some partial compensation coming in Q1 of this fiscal year? How should we look at it?
I think we've said on the last few calls that we do get compensation, but we won't be able to comment anything more about that. So I think that's pretty much all we can tell you on that.
All right. Just one last one. In terms of dividends, how should we look at going forward? Our payout ratio has been declining in the last 3-4 years, and you have mentioned about it that we'll be spending cash more towards purchasing planes now and towards adding more capacity. But in terms of directionally, should we look at these kind of payout ratios sustaining in the next few years?
So firstly, the context under which our board looks at dividends is in terms of long-term shareholder value. That's a very clear lens that our board looks at. And in the context of long-term shareholder value, we believe that our best use of cash right now is to invest in buying aircraft. We think that's a significant competitive advantage that we will create. It'll bring down our cost structure. And in light of what you see in the marketplace today, it all the more reinforces that cost structure is the key to fundamental long-term success. And so with that context, that's the reason the board has allocated the majority of our cash generation in fiscal 2018 towards the purchase of aircraft. We won't be able to give you specific guidance going forward, but the context around the decision-making is, as I said.
All right, thanks, and all the best.
Thank you.
Thank you. The next question is from the line of Achal Kumar from HSBC. Please go ahead.
Right, there you have it. That is the management of IndiGo talking about overall how the quarter went by in terms of what has been the financial impact. They said that the March flight cancellation rate was higher due to some ongoing issues. They have received new engines to replace all the affected ones, because remember that was a big problem with issues with the Pratt engines, and they said those Pratt engine issues will take some time to resolve. They will continue to buy more aircraft with the kind of free cash flow that they have. As of now, no clarity with respect to the MD and CEO's appointment.